How's it going, crypto community? So I've had a lot of people ask on the video that I did just the other day about my exit plan strategies. A lot of people were asking if they could get a link to the PDF for this. Now, I'm not going to do that in this one, but I wanted to show everybody why I'm not releasing this document for the public yet, right? So I've decided that after doing this really simple one where it's just a cash out method, I wanted to provide people a more sound method of participating in this market over perhaps the next 3-5 years. How, if you're in XRP for the long term, this is more so for long term exit and re-entry plans, right? So these are going to be ordered in degree of what I consider the riskiest first, and then the least risky, right? So you're going to get the most exciting at the beginning. Congratulations. The first plan I like to call 3 steps forward, 2 steps back, and this is the highest risk that you could potentially take. And in this one, all these examples, like in the previous video, which if you want to understand these up here, by all means, go check out my previous video on the matter of exit plan. But in this one, we're going to cover strictly these. And again, we're starting with 10,000 XRP. Now, in this one, whenever we reach a price point, an exit point, we're going to take 75% of our total, whatever the total is, off the table. And after cashing out, we're then going to reinvest 75% of that back into the market once the market performs a 33% retracement. So it goes back to within, once it hits $5, it's going to perform a 66% retracement, which will bring it back to roughly $3 and some odd cents, which you could realistically expect will happen if XRP goes to $5 and the market price is not manipulated wildly high afterwards, right? Now, the reason that this is high risk is because at any given time, you're messing with a position larger than 50% of your total, right? In this case, you're messing with 3/4 of your investment at each point of entry and exit. Now, that makes this extremely high risk just in and of its nature. The reentry point of 66% is actually, relatively conservative, and that's why I use this percentage, I believe, for the entire model for all of them. Yeah. So your reentry is for all of these is set at least in this what I'm showing you, at a 33% retracement of the exit point, which is again very realistic in almost any regard. So to continue on, now we've got that how these ranges are going to work out of the way. With the high risk version, again, it's 3/4 are sold and 3/4 are reinvest after a 33% retracement. After this exchange, you will take away from your 10,000 XRP at $5, you're going to take away $9,000 in profits. This is from the 37,000 you cashed out, and the 28,000 you cashed back in got you 8,500 XRP. So you went from 10,000 XRP up to 11,000 XRP, which you now can cash out at $10. You will be able to cash out 75% of that 11,000 XRP, which is 8,267 XRP. That cash out at $10 is going to net you 82,000, which you can then reinvest again 75% at a 66 or at the 33% retracement, and that's going to net you this time $20,000. Now, unlike in my previous models where I was adding all of these values up as we go, right? This is at each. right? So what I could do is, if we want to see that, actually, because I do want to show you that as well, we're going to add all of these into the equation. All right, and then fix all those. There you go. So at this point, at the $10 exit, you've taken $30,000 in profits. And yet, your stack of XRP is still growing. So you went to 30,000 in profits, but now you have 12,000 XRP. And you have 12,000 to sell 75% of at $25. Now, I could walk you through every single exit point all the way down, but the idea is the same. And in this model, obviously, you're going to end up with a fat stack of XRP and of US dollars, right? By the time you get to 1,000, you have nearly twice as much XRP, and you've taken $6 million, nearly $7 million in profit while still building that stack. And this incorporates 2, 4, 6, 8 entry and exits over what would be a several year span. At least 5 years realistically is when you could expect to make these trades over, right? This is why long-term traders have the most to gain, because this high risk is high probability over a longer period of time, assuming the market actually doesn't just go wild whenever, there's not a revaluation, right? Which is a very real possibility right now for XRP, as we've discussed at large in previous topics. So that was the most exciting one, right? We can end up, if XRP hits $1,000 and by 2025, we'll say, then you could end up with somewhere in the range of 26,000 XRP, which would be equal to $26 million off of 10,000 XRP today, which is worth about $5,000 today, right? Wow. $5,000 into $26 million in a roughly 5-year span. Even if it's a 10-year span, 5,000 risk for 26 million reward. I don't know. Is that risk worth it for you? It's worth it for me, right? A little bit more worth it for me, but I'm not a financial advisor, and so for that point, let me show you some other alternatives, right? Now in this, I have a medium risk, which is it's called 2 steps forward, 1 step back. And the idea behind the medium risk is that instead of selling 0.75 of your stack, you're selling just half of it. You're selling half of it for each one. So instead of 7,500 XRP in your first cash out, you're cashing out 5,000. And then, obviously you're going to be making less gains overall, but you're also protecting yourself more, as you are not, you're protecting your initial more because you're not risking as much in believing that you're going to be able to cash out at said point and get in at the 33% retracement, right? So the idea is that now there's several different ways that you can also do this over a longer term time frame, where you break down each of these cash out points into multiple different scale in, scale out, ranges that makes it so much more profitable for you, and safer, more than anything. But this is already probably complicated enough for most people to try and wrap their heads around. So that's why we're sticking with, just a simple exit, reentry, we're not getting into scaling. We can talk about that in a future video, right? Now, so the idea though is that in this one you're taking less risk because, oh yeah, when you're selling in this one, so to get more XRP than you're losing in this model, what you have to do with the risk models that we're going over is you have to put a greater percentage back in than you're taking out, and that ensures that, you know, we're taking out 50% of our total, right? So we're taking out 5,000 XRP of our 10,000, and in order to ensure that we're getting a healthy amount of XRP added back into our stack when we buy back in, we have to ensure that we're buying more than 50% of what we took out. Because when XRP retraces 66%, that means that for every 3 XRP that you sold at your $5 price point in this example, you're now able to get 4 for every 3 you sold, because the price has been reduced by 1/3. And so another way to think of this is, if you have 3 XRP at 33 cents, right? Or sorry, let me think of a different way to word this. They'll make more sense. So with our 5,000 example here, right? If we were to buy back in, we'll do 0.5 here, right? Now you see that when we put back in half of our XRP, we're actually ending up with only getting 3,700 XRP back into our holdings. So we're actually losing XRP if we use this 0.5 reinvest model, right? Now, this is good for those who are looking to de-risk themselves to XRP as time goes on, as opposed to adding risk, right? That's why we call this the medium risk model, and the other one was the high risk model, because instead of scaling yourself out of the asset, you're actually compounding yourself within that asset as you take profits along the way, right? Now, these are methods that, you know, at least while the asset is young, in my opinion, the higher medium risk methods are actually what most people will want to adopt, especially if you are planning, if you see the long-term potential in XRP, you'll want to adopt one of these high to medium risk methods so that you can grow your stack while still being able to take profits, right? If you look, you know, even though, you know, you're risking significantly less of your holding, you know, at least, you know, 33% less of your assets at any given exit point in this medium one, you're still taking decent profits, especially after $25, right? At every point you go beyond $25, you're earning basically a year, you know, the average worker's salary in a trade, right? And the amount that you're actually pulling out, the cash outs, are going to be crazy. They're going to be mind-boggling. But you're reinvesting those to, first off, avoid, you know, capital gains taxes, and also to ensure that you're still growing those stacks, right? So, really cool stuff in regards to how, you know, how you can plan out, you know, using just basic multipliers, how to ensure that you're not just making a profit off of your, you know, investment, but also maybe even building your stack along the way, right? Now, again, this, as I put with the first system, none of these systems involve scaling, which is important for you to be able to ensure that, say you sell 50% of your XRP, but it's at the $5, but it's not there. The market never retraces to 30 or the $3.33 or whatever it is that is the 33% retracement of $5, right? Say the market doesn't do that. Well, do you stay out or do you buy back in over $5? You don't want to do either, right? Ideally, what you want to do then is scale in. And so to go into scaling very briefly, scaling is where you take, of this, what we're going to reinvest is 75% of our initial, 75% of the $25,000 that we took out in this case, right? So we're gonna take that, pretend that this $18,000. Well, of this $18,000, we're going to put 40% of it back in at a, say, 85% retracement. And then we're going to put 40% or 50% of what's left there back in at a 70% retracement. And then 50% of that in at the 60% retracement, and then the 70% retracement, and then the rest of it, the remaining, we'll put back in at that 66% retracement, right? So the idea is that by doing this, you ensure that even though you're reducing the amount of XRP you can make by just trying to buy all of it in after it retraces to 66% of its previous high, then you're still at least being protected in the sense that you will not sell out that full 50 or 75% or whatever the percentage you are choosing to exit is, right? So that's why I've constructed that's what I personally will be doing when I begin to trade, is using scaling, right? And I'll be doing that both for my exits and my entries. It works for both, right? But for now, I just want to stick to the scaling out because it is relevant to understand that the reason why I stress that I'm not a financial advisor is because there are so many nuanced variables involved with trading that for anybody, even a financial expert, to claim that they can advise you all over the internet is absolutely absurd, because everybody has a unique financial situation and every investment is different, right? So our next example here is the null risk, right? Now in the null risk, the idea is that you want to be taking profits, but you don't want to touch your base, whatever your base XRP is, right? So in this example, you start again with 10,000 XRP, and you're only going to sell in this scenario 0.33, which is 33% of your initial, so 3,300 XRP. And you notice, if you're able to look at the screen, that every single sale is going to be for 3,300 XRP. And every time you repurchase, you're going to be repurchasing 3,300 XRP. And you'll be doing this at, again, the 33% retracement, and you'll be keeping, in this case, 33% of your profits, right? Because you're putting 33 back in, and ultimately, sorry, I just kind of like ran further. I was trying to process, make sure that I was actually being factually correct about 33% out is what you're actually taking in profits. And yeah, so this is a cool little trick, when it comes to percentages to, be able to utilizing safe ranges, make safe, exchanges for what would ultimately be a zero risk trade plan, right? And as you can see with this, even though you're not coming away with, say, like the high risk, 26 million in returns, you're still going to make a healthy sum of money at $11 million in returns. And the idea is that you're in this model, you're going to, ultimately ensure that you're not putting too much risk out there at any one time, so that at any one of these steps, it's less likely that you're going to get burned because you didn't get the re-entry that you wanted. And so you are up Pooh Creek without a paddle, so to say, right? And then obviously our de-risk versions of these, just to cover really quickly, the only difference between these, and obviously you see that the value that you would be able to attain is going to dramatically drop off with these, going down to 5 million and then 3 million with both of these. But as you notice, that's because your XRP that you are in possession of at each phase is being reduced in these, and this is known as de-risking, right? It is removing exposure to whatever that is that you are de-risking from. Now, you'll notice though that in the de-risking model, you are making a lot more profits at the beginning than any of the high risk models, right? The high risk, the returns come later, and that's ultimately what makes me feel personally that they're less high risk and more actual how would you say, just less risky for me. But that's my risk adversity, and I see it as less risky for me because a principle of psychology is that a finding of psychological studies has shown that those who prioritize long-term rewards over short-term benefits are monumentally more likely to be successful in their lives than those who don't. And these tests have been performed on children, young adults, across the age spectrum, and it holds pretty true. So it's something that I have in my life made a very conscious effort to be conscientious, right, of making these sorts of decisions. Now, that's me based upon my belief system, right? So again, I am not a financial advisor. If you found these additional, more elaborate exit strategies interesting and would like to have more, content made for you in regards to how to do things like I said, scaling. I can do. I'm probably going to do a video specifically on scaling. But if there's other things in regards to how to manage funds that you're interested in, if it's something that I feel that I understand to some degree that I can help explain to you, then I will absolutely try to make a video for you on whatever subjects you put in the comment section below. If you're new, by the way, be sure to hit that subscribe and also that bell so that you can be kept up to date with all of my newest crypto related content. This obviously again being an exit strategy for how to manage your portfolio of XRP and whatever your native fiat is. In this case, we use the dollar example, right? So for everybody out there who is not already, please also be sure to hit that like so that we can get this video pumped up in the YouTube algorithms and help maybe enlighten some people who don't yet have a exit strategy. Maybe this can help inspire some people to come up with their own better strategies, right? So, as always, I've been Jade. You've been watching The Martian Report, and I can't wait to see all of you in my next video on Mars.